If you didn't like this market decline, if that was really weighing on you and this had a lot of pressure in your portfolio, you were really down way more than the market because you've taken on a lot of speculative bets, etc. I would use any rally between here and 5,800 to lighten that portfolio a bit and rebalance and start thinking about a little bit lower risk profile going into this year, because again, we're most likely not through this market environment of higher volatility. So here's what you need to know before the bell. So yesterday we talked specifically a little bit about money flows that were turning a bit more positive yesterday, and that certainly was the case with the follow through that we saw in the rally yesterday. Markets moved up sharply, money flows moved back into very positive territory. MACD, the momentum signal, triggered a buy signal yesterday. Relative strength continuing to improve here. So kind of all systems go right now. We've formed a very nice bottom here, challenged it a couple of times, and then came off that support right here at kind of these lower levels. Now we're starting to get back up into some areas where markets are going to start to get a little bit challenged here. And again, when we take a look at kind of just some of just the technical backdrop of this, this is part of the issue that we're going to be working with is this 50 and this 20 and 200 day moving average, which have now coincided with each other. So yeah, we have this buy signal in place from a fairly low level that should give the markets a bit of lift here. Again, this week is the end of the quarter rebalancing. We've got $85 billion of pension fund balancing that has to be done over the course of this week. So there's a good bit of buying. If you take a look at pension funds and target dated funds as a combined entity, that's about $125 billion of buying that potentially needs to be done by weekend. So again, this relative strength improvement in the markets, this momentum buy signal certainly suggests that buying is coming into the market along with money flows turning positive. But whatever rally we get here is likely going to be contained between the 200-day moving average and this 50-day moving average. So once you start moving back up here towards 5,800-ish, somewhere in there, if you didn't like this market decline, if that was really weighing on you and this had a lot of pressure in your portfolio, you were really down way more than the market because you've taken on a lot of speculative bets, etc. I would use any rally between here and 5,800 to lighten that portfolio a bit and rebalance and start thinking about a little bit lower risk profile going into this year, because again, we're most likely not through this market environment of higher volatility. If you go back and look at Trump's previous term, right now the markets are trading just pretty much like they traded in the first term when he was in office. And remember, in 2018 we had this trade war that started with China. We had a similar sell-off. The market rallied back, eventually went to new highs, and then we had a 20% correction by the year end, and then the market rallied right at the end of the year and then into 2019. So again, this is kind of where we are right now, is that I would expect this year to continue to be one of more volatility, rallies, declines, as we continue to digest through these different policy actions coming out of Washington that are impacting, that certainly have an impact. There's a bit of a difference between doing a policy that is, based solely on immigration, right? We're going to deal with immigration, whatever it is. That has economic impacts, but it's spread out over the course of time. And so the markets can absorb that. But when you start doing policy where it's related to like tariffs, which have an immediate impact on earnings, the market has to digest that much faster, and that's more difficult. That creates volatility. So if we can keep getting more of this kind of trade war narrative, tariff issue, or any other types of policies that have an immediate impact on what earnings expectations are over the course of the next 12 to 24 months, the markets are going to have a lot more volatility. So again, I would expect to see that this year. So rallies back to these resistance levels, and again, we've got a room here to about 5,800 right now. But back to that level, rebalance your portfolio, reduce risk, raise a little bit of cash, look for value over growth, those type of things. They'll probably help you navigate the markets better this year. Okay, that's what you need to know before the bell this morning.